Welcome to the Money Insights Podcast, where high-income earners come to learn wealth-building strategies that will take them from high income to high net worth. With your hosts, financial and wealth-building experts, Christian Allen and Rod Zabriskie.
Welcome into today's episode of the Money Insights Podcast. I'm Christian Allen here with my guy, Rod the Pod Zabriskie. Rod, what's going on, man?
Hey, I am doing great. How are you?
It couldn't be better, Rod. Are you ready to get political?
I'm ready.
Okay. No, I am good though. It's a beautiful day, Rod. It's like warm. It's like 55 degrees outside. Like
It's
maybe not quite
insane.
that, but it's nuts. It's pretty warm.
Yeah.
So I'm enjoying a little warm before the cold comes back. Other than that, we're just rolling along, trying to make sense of this crazy world.
Yep.
What about you? Are you good?
Yeah, and I am pumped up. Making sense of the crazy world. I don't know that we're going to accomplish that, but we'll give it a shot.
All right. I like it. Let's do it. Okay. So today's podcast is called, and it's going to coordinate directly with my LinkedIn newsletter. So if you want more information, go check out the LinkedIn newsletter. It's called Trump's Tariffs, Crisis or Opportunity. That's the question. Okay. And that's what we're going to attempt to tackle in today's episode. So I will say this. I just want to give a little bit of context or preface to our conversation for today, because I don't want anyone to misconstrue and get the idea that we think that we're like political pundits or something. We're not. We're not going to dig too deep into the political side of this. Like I've attempted to at least stay neutral on the subject, right? So what we want to do is we're going to tackle what it means for people from a financial standpoint.
Right.
That's really where
that's what they care about.
Right? That's what you care about. And so today's conversation is as much about mindset and mind shift as it is about the financial side of it or the political side of it. It just so happens that all of those things are converging into one like very important topic, right?
Yep.
Okay.
I think I've mentioned recently that Jody and I have been studying. We've been doing this course in economics, and it's really fascinating. And that's the thing that I've really come down to, is that the economics does get politicized, but really it's just about understanding trade-offs and seeing how the decisions that are being made that you and I have I won't say no impact on, because the guy got voted into office. So there are people who wanted what he was offering. But the point is, we just want to understand the impact of these things. What are the trade-offs? Who are the winners? Who are the losers? Because we'd much rather be on the winner's side, right? And we can actually see that if we understand what the tariffs mean.
Yeah, well said. Well said. So before we jump into tariffs, I am just going to say this. I just assumed that it was all just talk. Like I got to be honest. If you asked me 3 months ago, 6 months, I would have just been like, you know what? It's just all talk. I can't imagine that actually happens. So I sit here like a little bit surprised that this space that we're kind of currently in actually exists. And to your point, the next step or the next best thing that we can do is figure out how to make sense of it. And, and we can decide in a lot of ways whether it's going to be a crisis or whether it's going to be an opportunity. Chances are it's going to be some combination of both, right?
Yeah, I agree.
So, okay.
And
so what I want you to do, Rod. Oh, go ahead first.
Yeah, can I just respond to what something you said there? I think 75% of it was talk, meaning that what is clear that he's done is he's turned it into a negotiating tool. Threaten tariffs, they respond. And in a lot of ways, it has gone favorable in terms of, because they know he'll go through with it if they don't respond accordingly. A lot of the countries out there have come to the negotiating table, given up on certain positions. We've seen it with Mexico. We've seen it with a lot of the different countries. So there is some of that, but the fact is that, it is moving forward, right? Tariffs are happening. He was absolutely serious and is serious about moving forward with them. So now here we are. Let's understand it and see what we want to do about it.
Yeah. And maybe the other thing that I'll say is just that I don't quite understand how it's even possible that in the democracy that's been built, how one person, even the president, gets like the authority to be able to do this. So I did have to like figure out some of that element. Now, when I say figure it out, I just had to do a little research and understand why that's happened. It sounds like, and this is again probably my ignorance showing, but it sounds like it's primarily because we have given, like Congress has given authority on several things back to the president. And so now it's a question of, well, they could stop it, but it's this long drawn out process. Whereas, so it's just kind of this weird, bizarre mix up where they've kind of given, again, authority on specific issues, right? Like emergency situations.
Yeah.
To be able to do certain things. And so the president's able to move on those things really quickly, and to push them back would be difficult. It would take the parties coming together, at least to some extent, right? And all of that is a big question mark. So again, it still seems crazy to me that we're at a place where one person can have enough authority to do these kind of things. And yet, I guess bottom line is we shouldn't have given him the authority to do it. Well, and so now we've got to pay the price for that and figure out how to make sense of it.
At some level, it's actually even constitutional because the president was given authority over foreign policy. And so I think Congress can rein some of that back in and do. Obviously, he doesn't have all authority over foreign policy, but I think to the extent that he does, that's part of what this comes into. So anyway, but I think you're right. There is a lot of power in that one hand for sure.
Okay. So I won't say anything more. Like I said, my ignorance is probably showing as it relates to this, but that's where my head's at. That's where my head was at when I came into this conversation. And then the question that came to my mind relatively quickly was, okay, for me, what does this mean? For my clients, what does this mean? For the people that we're constantly working with? Like, I guess my goal at that point was to say, like, okay, obviously there's some negative ramifications that are going to come from tariffs. Yeah. To your point, there's probably some trade-offs as well. But the broader point for me was, how do we just do what we can to put ourselves in a position to where we're taking advantage of the opportunity? Because I just believe in opportunity in general. There's always trade-offs we've said now 3 times. Yep. If things are going to be more difficult, that just means that for the right people, there's probably going to be more opportunity to do something special. So anyway, that's just where my head's at. So Rod, let's at least tell people what tariffs are. Most people probably know, but just make sure that we at least get that on the table.
Yeah. So a tariff is basically, it's a tax on anything that's I shouldn't say anything. In this case, they're targeting specific goods that are being imported from other countries. And also it depends on where it comes from. That determines the percentage of the tariff. And then again, on specific products. So when those products are imported into the United States, the importer has to pay a tax in order for it to actually land on U.S. soil.
Okay. Clear as mud, Rod. We're good.
Yeah.
No, I'm just kidding. No, it actually is pretty clear. Okay. So I'm going to do a quick breakdown of the new tariffs as I understand them. We've got 25% tariffs on Mexican imports, right? We have the 10% additional tariffs on Chinese imports. And we have, I don't remember what it was on Canada. Well,
I think that's another one of those kind of moving targets. I think it was going to be 25% on both Mexico and Canada. But again, these negotiations, even by the time this gets released, some of these numbers may be different, but that's at least
that
where
was at least
right
an
now.
idea. Okay.
Yep.
Okay. So maybe the next question to ask you, Rod, is why, maybe this is obvious in this context, but why do tariffs matter at all?
Yeah. Well, if the importer has to pay extra, they're just paying the government, right? They're paying the government for the privilege of bringing the product into the country. Well, that's an extra cost. Well, somebody has to pay that cost. And that's, again, go back to the economics course. If there's a higher cost for the importer, then that has to be covered somewhere. They have less profit. That's a possibility.
Yep.
They pass it on to the consumer. That's more likely because, I mean, let's face it, a lot of these things don't have large margins anyway, right?
Mm-hmm.
So
like a 25%,
we're going to pay more.
Yeah, a 25% reduction in profit, right? Or in my overall margins could be a really massive deal. And it could be the difference between profiting at all and not. So right. there's a lot going on there. I think about it, like I take a step back and think about it for my own business. Like, what would it mean if suddenly, XYZ part of my business was, there was suddenly a 25% tariff on it? It would absolutely be impactful. And then again, you've got to figure out, well, in some situations you can pass things on to the consumer. Sometimes you can't, right?
Mm-hmm.
So anyway, but to your point, somebody has to pay the cost that's going to be there. And what we're just in a battle of who's going to pay the cost, right?
Yeah.
Trump's over here saying you guys are going to pay it, and then we're undoubtedly going to continue to have some retaliatory stuff that comes out that says, hey, this is what, and we've seen that already, right? We've already seen some of that back and forth. And so, it's just, again, it's a matter of kind of waiting to see where it lands. But in the meantime, let's talk about who wins and who loses. I want to start with the losers, Rod. So tell us who the losers are in this situation.
Well, I mean, any obviously anything that's being imported, right? So in the supply chain, and all that means is that, let's just use a car as an example. When a car is built, you have parts that are manufactured around the world that are brought together at a manufacturing plant and put together. And so even if the car itself, like the actual auto manufacturer, is here in the US, well, they're bringing parts in from all kinds of places around the world. And so all of those parts now cost more before they even get to the manufacturer. Therefore, by the time they get put on the car and sold to the consumer, then it's going to be more expensive. So the automakers, right, retail, and any retailers are absolutely impacted by this. Electronics, in the sense that like semiconductors are a big one. China has been a huge exporter of semiconductors. And the idea, like, so someone might say, well, why on earth would they do this? Why do they want to just add extra cost? And the next step, reason for the tariffs is so that we do more here. If it's more expensive to import semiconductors, then let's increase our manufacturing capabilities here in the US for semiconductors. And again, it's targeted in some of these specific things. Steel and aluminum is a big one. Even in his last term, Trump did that as well. Biden actually increased the tariffs on some of these things like semiconductors during his term. So it's just continuing to add pressure so that we start to do more domestically rather than trying to import so much. But there's an initial impact. So in terms of losers, those businesses that are importing those goods, whether it's the retailer or whether it's the manufacturer that's adding them to their other pieces, are big losers right now, right off the bat.
Yeah, that's an obvious one, and it's an important one to make sure that we're touching on. What about investors, Rod? What investors are likely not super excited about these tariffs?
Yeah, well, it's if you invest in, let's say you invest in the ports, right, for the place where the products are received. The idea is if the tariff is meant to reduce the number of imports, well, then there's less business that's being done there. So if you have invested in those places, and especially, I mean, now it's been big recently in the news, right? They're trying to create automation and do all these different things. Well, how can they put the capital into that if they're facing a reduction in profits in just business that's being done, right?
Yeah.
So I guess looking at those places that are directly impacted is where you can see kind of where that is. And again, retail, if you have historically invested in retail, well, you're going to get hit, right? Lower margins and or lower just business done revenue because prices go up, consumers buy less, right?
Yeah, so it's basically any investors that have a connection with importing goods. Like at the end of the day, that's going to be the kind of broad level effect, and it'll have some on all of them.
Yeah, and I think it's fair to say the further down the supply chain you are, the harder you're hit. So in other words, if it's, well, at least what we saw in the previous one is like steel and aluminum at the raw material level, those profits actually go up because they can sell it for more, right? They're producing it, they can sell it for more because they produce it domestically. But if you're buying it from them to make your widget, to build a building, to whatever, well, now the further each step you get down that supply chain, the more hit you are. And so any investors in those things are going to be hit harder.
Okay. And last but certainly not least, Rod, the biggest losers are the consumers.
Yep.
Okay, so when I first heard about this, I started thinking about, oh gosh, how does that affect me? And it actually could affect me quite a bit. So I mentioned that I'm building a house right now. Well,
Yeah.
I'm almost definitely going to see an increase in some of the supplies that are needed to build the house. It could be significant. So not great timing from that perspective. But I'm sure
Right.
but again, like we have to look at it on both sides and find crisis. We want to look at it and say, is this going to be a crisis or is it going to be an opportunity? It might be some combination of both, but I know what I'm absolutely confident that if we focus on making it an opportunity, we can end up further on that side of the line. That's kind of where my head's been at. Even though my initial thought was like, oh, how's this going to affect me negatively? The next thought that I started to come around to was, okay, what are the opportunities that I can take advantage of so that overall this doesn't affect me negatively? So anyway, but at the end of the day, consumers are going to be the biggest losers because prices on things that get imported are almost certainly going to go up, right?
Yep.
Okay. Those are our losers, Rod. Now, let me be really clear. Nobody listening to this pod is a loser. They're all winners. But if you're investing in that, you might lose in this situation. So, okay, let's talk about who wins, Rod. Talk about our winners.
Yeah. So domestic production is the winner, right? And it may not happen right away. I gave you the example of the automakers, right? Initially, the costs go up, but to the extent that more of the manufacturing, more of the production gets moved to the U.S., then it goes up. And I've read about a few different examples. And so, for example, Caterpillar was one. So initially their costs are going to go up, but because they can, and they already have been moving some of their production back. So they moved a lot of it to China over the last, 30, 40 years. They now have been in the process of moving a lot of it back. And to the extent that they do that and have it already in place and are productive here, then they become a winner, right? And that's one example of many, many companies. I talked about semiconductors. That's already been in process of, over a long period of time to move that here. So I also mentioned raw goods, steel, aluminum, are the kind of the big ones. They're winners.
Okay, let's talk about it from an investor perspective. What kind of investors do we think can end up being winner? Or maybe we won't even say can end up, but just based on this happening, no other moves, who from an investor perspective ends up being a winner?
Well, here's the thing, but because there are producers that are now going to be moving a lot more of their stuff here, that's going to take capital, and they're looking to investors to do that. So there could be private equity that would be involved in that, but even just a stock, right? You look at a company or an industry that you feel like is going to be positively impacted by this, and you say, well, I would like to go and invest in some of those companies that are doing that. And by no means is this us suggesting any individual recommendation.
Thank you, Rod. We got to get our disclaimers in there.
That's right.
We are not giving personalized financial advice. But again, to your point, it does make sense. And I remember now this is going to be a little bit of a tricky analogy, but I think it still works. So when COVID came, I decided that's when I started. I shouldn't say I started, but I kind of decided to up the amount of money I was putting into individual stocks, right? And I put money in there, and I specifically put it in places that I thought would be able to would have a winning impact. I know there's no winners in COVID. I get that, but I tried to figure out what companies would be positively impacted from a financial standpoint because of what was happening in the world at that time. And I remember I put in like $89,000 initially, and within like just a few months grew it to $240,000. So like it just skyrocketed. And so like my point is just to say there are opportunities that come. Now, I'll be really clear that they corrected and I just left the money. I'm not like a trader, so I've let it buy and hold. And so it went from like up to 240, then it, crashed down to like 119. And now it's, somewhere between those two numbers. So like, but it's still been a good investment. But my point is really to say like, even in a very difficult situation like that, there were opportunities for investors to make good decisions that give them an opportunity to create at least financial profit. Fair?
Yeah. Yep. I think it's fair.
Okay.
And
who else wins?
Yeah. So by an extension of that, anyone who can adapt their supply chain quickly. And so I'm going to throw into this basically tech. So companies that have already invested in automation and or are still in the process of doing that, they're going to be able to benefit from this. And then also just tech on the broader sense, I mean, we're the tech capital of the world, right? The US is. And so when you look at Apple or Samsung or these companies that thrive on this, well, to the extent that fewer things are imported, then they're bolstered, right?
Yeah, that is interesting. I mean, I hadn't really thought about that one much. But yeah, so if you're in a company that is able to adapt and move quickly, that'll give you a chance to be like, to get in front of it and be less impacted. And when you're less impacted and you're compared to everybody like who is impacted, it almost could end up like, not almost, it could certainly end up being, as an investor, a profitable opportunity.
Yep.
Fair to say?
For sure.
Okay. And then the last one we're going to talk about is the dollar being strengthened. Talk about why that's important. Why and why it's a win.
Yeah. So the dollar is impacted by the net import/export ratio. So if we're importing less, exporting more as a result, right? Even if the exports stayed the same, the imports went down, then it's strengthened, but the reverse could easily happen. And when that happens, then the dollar is stronger. It has more value relative to the other currencies out there.
So, okay. So who actually wins in that situation?
Yeah.
So
well,
dollar's
obviously
now strengthened. Like how does that impact me potentially?
Yeah. So if you're in foreign exchange, then that obviously can help there. If you do business across borders or travel or whatever, well, now what's interesting is for the same reasons as we pay our higher prices here. So we see the inflation for what we're buying just in everyday goods here. When you go overseas, then your dollar is going to exchange for more, and you'll actually be better off in other places when you spend that.
Rod, I was just mentioning this to you before the show, but had you previously heard of this concept of geographical arbitrage?
I mean, I've heard about it. I don't know much about it though.
Okay. So the only reason I know is because a while back, like it's been years ago, I listened to the Entrepreneurs on Fire podcast, right? And the guy that hosts it does that. He lives in, I think it's Puerto Rico, and he earns all of his money in the US and then he pays taxes there. So now it's a huge win for him, because the idea is that if you live in that country more than 50% of the time, you get to pay their tax rate. So, and it's like a flat, I want to say 4%, something insane, right? And so that's obviously, and so the idea is that you're using geographical arbitrage to earn money in the US and pay taxes in a place like that. That same principle kind of applies here.
Yeah, for
right?
sure.
So if you make money here, but you live in a different place where you're able to spend money, your dollar is going to be impacted in a positive way. Unfortunately, a lot more people are going to have the opposite effect, at least that are here in America. So but again, we're talking about winners and losers here. Consumers are without question the biggest losers. People who are living abroad, that kind of thing, those people get a dollar that goes a little bit further for them.
Yep.
Okay. Are there any other winners, any other wins that we want to talk? Like, to be honest with you, like, I don't view this as a huge winning situation, but I view it as an opportunity as investors, as individuals, to make it a winning situation. Does that make sense? So let's move into kind of our next segment where we talk about what investment opportunities might be there. You hit on private equity, Rod. Talk about where you see private equity as an opportunity and why.
Yeah, I mean, that's the nice thing about private equity and what it is that they're always looking for the next best opportunity. And they're on the forefront. You have really smart people who are running these funds. And so if you align yourself with those smart people and they're on the forefront, they're already way ahead of us, right? By the time this podcast comes out, months have gone by where they've already been scouting out and finding the industries that are going to be the right places to invest and are looking at those things so that by the time we as the investors tap into that, then they're poised and ready.
Okay, so when we're talking specifically about private equity, you're not necessarily saying find a private equity group in this fund that does this kind of thing. You're suggesting aligned with, if you're aligned with a private equity group or private equity groups that have a really strong track record of doing good. Because private equity is so broad, right?
It is.
It can be in like any segment. So
Mhm.
so then it's a matter of, I mean, you would probably want to make sure that you're in, the right types of private equity. We're going to talk about real estate in a second, but your real estate private equity group is not going to be what we're talking about here.
Right. Yeah, exactly. This is people, these are companies, funds that are investing in businesses and industries, and they're out buying,
Yeah. So they're doing a lot of that work for you. It's basically like you're paying a group to do some of you, like we talked about. Okay, I go find opportunities where companies are going to be positively or negatively affected. And I can, again, with the stock market, you can long or short positions. So like
Yep.
there's literally wins to have to create weathered money, regardless of the way that money's flowing. So
Right.
what we're saying here is if you can find the private equity groups that have a good track record and align with those, they're just going to do some of the heavy lifting for you just by being an investor with them. Fair?
Yep, for
Okay.
sure.
And then, of course, you could take that a step further, and we're going to talk about this next. You could take it a step further and find private equity groups that are specifically in niche opportunities. So if you've thought through it enough to say like, hey, XYZ segment, I can see that really being a place where this has an impact. Let's find a
Mhm.
private equity group that has a history of investing in that specific sector, right?
Yep, absolutely.
Okay. How does it affect real estate? And real estate's a big one, right? Obviously,
Yeah.
almost everybody listening to this will be thinking, how is this going to affect my real estate? Like whether it's there, and really it's going to be investors, because like almost everybody listening to this invests in real estate outside
Mhm.
of their, like, not just president, like their residence, but outside of that. So just talk about what you see as the impact to real estate investors.
Yeah, as far as the real estate that you hold now, to the extent that there is inflation, that helps you, because if it's pushing prices higher, it's pushing rents higher, it's pushing property values higher, right? Inflation does all of that. So if you, and we're talking specifically about real estate, but it could be any hard good that you invest in. It could even be inventory, right? Inventory that a company holds right now is going to all of a sudden be more valuable selling it because it's more expensive to replace it, right?
Yeah,
And
so if
and
you're a
so
builder, this isn't good. This isn't a great thing, right? But if I've already got that thing built and now I have people who are potentially wanting to buy it, it would cost them more to build. Therefore, the price of the actual real estate goes up.
right. Yep. So that's real estate you're holding now. But let's talk about building, because if you're
Okay.
saying, well, I invest in developers, what kind of developers should I be looking for? Well, if they are developing in industrial and manufacturing and those kinds of things, then there could be some real opportunities that are coming for like new builds in real estate.
Yeah, that's fair. So talk about why you see that potential.
Yeah, just because, again, if the whole point is bring more of the manufacturing and production domestic, and again, I gave the example of Caterpillar earlier. There are a lot of companies like that who already have reversed the trend and been bringing a lot of their manufacturing back to the U.S. from, like, China is the easy target, but a lot of places, right? A lot of companies moved manufacturing to Mexico or to Singapore, or not Singapore probably, but Thailand or whatever, right?
Yeah.
But now they're bringing it back, and they're going to need new facilities and or refurbished facilities that had been mothballed, and they're ready to go back on them. So there's going to be a lot of business to be done in those sectors.
Okay. Okay, good. So we've talked a little bit about private equity. And again, private equity covers a broad, like you can literally get any kind of investment inside of the private equity space,
Yeah.
right? But well, that certainly means that there are opportunities. And again, we can find people with a great track record, or we can look for specific segments. But either way, we have opportunities without question that are going to be there. Talked about real estate, and in some situations it could be difficult, but like you said, there's also going to be opportunities in real estate, so you just have to know where to look for them and maybe do a little bit, put a little bit more work in on the front end. And for some people it's going to be like adjusting their strategy, right? So if I've
Hmm.
been in the fix and flip business, like that might have an impact. That doesn't mean I
Sure.
necessarily am going to leave the fix and flip business, but it does mean that it changes the dynamics in a way that I have to take a step back and kind of reevaluate how I'm doing it, and what the profit margins are, and if that works. For some people it might be just repositioning their assets and redirecting their strategies. You know what I
Yeah.
mean?
Yep.
Okay, what I want to talk about next, Rod, before we kind of get into what investors should be thinking about and doing right now, I want to talk about the all important element of tax strategy.
Yeah.
Okay, so why would tax strategy be important? Why would we even have tax strategy inside this conversation?
To the extent that you save on taxes, that is more dollars in your pocket. And if you're going to be spending more on things because of inflation, then it can be an equalizer in a sense.
Yeah, you need more money, right? I mean, again, it's your money goes further. So you're quite literally getting a raise on that money that comes to you. If you were and anyway, like you could do this in any situation, right?
Sure.
You could always look and say like, all right, if I'm saving tax money, then I'm winning in all of these various ways. But the reality is we're just suggesting that that's enhanced in a situation like right now where these tariffs have been put in place. Is there any other things that we should be that people should be thinking about, or like what things from a tax strategy standpoint might people want to think about today that could help them in conjunction with what's happening right now?
I think one of the things that Trump has talked about as a balancing effect against the effects of tariffs is things like energy, right? So that's been the big thing. Everyone says, well, you're going to drive prices up, and he's going to say people won't care because I'm going to bring the price of energy down. Well, how's he going to do that? Again, it's moving it domestic, produce more domestic production. So from a tax strategy standpoint, well, oil and gas is one of those big opportunities for tax savings. And if there's going to be a lot more production going on, more opportunities to do that. So
Okay.
I think there are some specific things that you can tie back to like that. What were you going to say?
We frequently talk about retirement accounts, obviously.
Mm-hmm.
So, in a situation like we're in today, these additional tariffs, does it have any impact on the way you might look at retirement accounts? Putting, and really what I'm saying is deferring taxes to a future point, like in a 401k, a deferred comp plan, any of those things that are just ultimately they're just kicking the can to retirement age.
Yeah, I mean, I think a lot of people have looked at opportunities to do Roth conversions and whatnot inside of it. And that means obviously paying the tax now. But to the extent that Trump and kind of that the right are trying to reduce taxes on companies, on those kinds of things now, and most likely taxes will go up again in the future, then it might be a good time to do that as well, right?
Okay. So, but philosophically, it doesn't change the way we think about retirement accounts, right? Like we're still looking at, we like the tax-free nature of Roth IRAs, Roth 401ks, and we're probably we're more bearish as it relates to tax-deferred retirement accounts, at least as a primary vehicle, right? Now, we talk about this a lot. Like we have tax-deferred accounts that we put money into. So it's not that they don't have a place. It's just that if that's like your bread and butter, it doesn't change anything, right? The focal point should be kind of getting outside of that, starting to look at some of these things that can create more value in different places outside of them. But I just wanted to make sure, because so many people who are listening are thinking about, okay, I'm putting money away ultimately for the purpose of being able to. Now, I get that a lot of people that listen to this think about retirement a different way. Like they're not probably viewing it in that same kind of work till I'm 65 years old and then have a 25 year retirement. But they're still thinking about things in terms of how do I make sure I have enough financial flexibility, financial control to kind of live the life I want when I'm done doing those kind of things, like working on a regular basis. Okay. We've talked about private equity and investing in businesses. We talked about real estate. We talked about tax strategy. Rod, the question is, what should investors do right now? Let's just go through a few quick steps. Number one, you just have to take a step back and actually take a look at things. I think this is one of the problems that people just often have, is that our lives are so busy. We get so focused on the various things. Like maybe you're somebody that is really into the news, and like you can just it's just so easy to get captured inside of that cycle, and it becomes sometimes difficult in that moment to just be like, okay, I need to take that step back. I need to try to get at least as emotionally far away from it, at least for a period of time as I can, so that I can think about it from an investor perspective, so that I can start thinking about how can I make the best decisions given the situation that we're in today. Would you add anything else to that?
I mean, just a lot of times we get because what you're saying, we get stagnant in keeping up with our portfolio. So you're just taking a look at it and saying, okay, well, I need to understand where I am now so that then we can move to those next steps.
Okay, so the next thing we want to be doing is, after we've taken our step back, step 2, we now look for opportunities, right? And again, this is why why I talked about the retirement thing. Like, we would say look for opportunities primarily in the alternative investment space because of the combination of, well, again, we've talked about how like linear I can get with private equity. I can invest in but again, your point about stocks was also right on the money, right? I can still invest in companies that are laser focused on a specific market segment. The point here is, once you've taken a step back, that's the next. And again, you've gotten a little bit emotionally uninvested. Now I can start to look for opportunities that are going to be playing against what's happening with the tariffs. And again, there's going to be a lot of them because there's always going to be trade-offs. That's just the way. There's companies that do too many different things for there not to be opportunities to take advantage of in this situation.
Right. And maybe going back to your point about the retirement accounts, if you haven't already looked at a self-directed IRA and you have money that you could move and do that with, now might be a great opportunity for that kind of. So almost combining the two, right? Taking that retirement money,
that would be a really good
place
move
where you can invest in alternatives.
Yeah, I love that move. Because to your point, if I want to get into the private equity space, it's really difficult to do that if most of my money is tied up in my company's 401k, right? The 401k is not going to have, it's going to be full of mutual fund options. Well, if I want to go outside of that, then I have to learn how to do that. And one really great way for people that have, especially if you spend a lot of your life putting money in those types of accounts, it's really easy to make a move from a regular. Now, if it's like a 401k or something, typically you have to leave, right? If you have money in an IRA, if it's not like a company sponsored plan, then it's really easy to transition that from a regular IRA to a self-directed IRA. And to your point, the big difference is just that I self-direct the money. That's why it's called self-directed. I don't have this very limited, supply of investment options. I now can go anywhere. It could be in hard assets like real estate. I could invest in whatever I wanted inside the self-direct. That's a really good point. Okay. So we've taken a step back. We look for investment opportunities. We have to revisit our tax plan, Rod. We've talked about that. And finally, we just have to do our best to stay ahead of some of the market shifts that are taking place, right? If we keep an eye on what's happening, that's naturally going to give us an opportunity to get ahead of it. And so if I bury my head in the sand and I complain about all of the, frustrating issues that come with tariffs, I'm probably not going to find myself coming out the other side a winner. The chances are I'm going to end up, kind of being that self-fulfilled prophecy. I'm going to become a loser. And yet, if I can take this other approach, I'm 100% confident that people can come out of this situation and still feel, at least from a financial perspective, like they're winners.
Absolutely. Align yourself with smart people who are staying on the forefront of those things, and or just become a smart person yourself, right? There are people listening now that have industry expertise that will really be valuable for them as they're looking at specific things that are happening.
Man, the most brilliant advice we've ever gotten from Rod. Quote, become a smart person yourself. I love it. I love it. We'll end with that. Okay, thanks everybody for listening, and we will see you next week.
Thank you for listening to the Money Insights podcast. To learn more about the financial and business strategies discussed in this show, please visit moneyinsights.net. The views and opinions expressed on the Money Insights podcast are not intended to be individual financial, tax, or legal advice. Always consult with the appropriate advisor before making financial decisions. And if you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This will help others find the show and learn wealth-building strategies for themselves. Thanks again for tuning in, and we'll catch you in the next episode.